Look at the share price of Citi, the bank. They've just kicked off the profit season. Revenue did fall short, and they're down 1%. Come on in, Brian Wesbury, First Trust Advisors. I want to talk profits. Let's put the Citi results away for just a moment. I'm told that the analysts are expecting a 14% increase in big company profits this year compared to the same period last year. 14%.
Right.
You give me your number.
Yeah, well, I actually think it's probably going to be a little bit higher. You know, every season, every quarter, we get earnings reports. 70, 75, 78% of companies beat those earnings estimates. And I think analysts have overplayed their hands. I think they've taken these down too much. But let's take that 14% figure for the fourth quarter of this year over the fourth quarter of last year and realize that the S&P 500 is down about 7% during that same period, which means the stock market relative to earnings is 21% cheaper today than it was a year ago.
So wait a second, Brian. You think, therefore, that if you did get, overall, you get a 14% jump in profits, that's real good, because we're going to compare it to the 20-25% gains we were seeing late last year.
Well, they were, and we have to remember that those 20 to 25% gains were really induced by the tax cut. If you look at underneath pre-tax corporate profits, they've been rising at about a 10% annual rate, and I expect them to continue to do that in 2019.
Okay.
And when profits are going up and stocks are going down, that means the market is getting cheaper. It's the opposite of what we had in 1999, 2000, when stocks were going up and profits were going down. So this is, I think, a good environment for stocks. We just have to wait for the catalyst that turns this thing around.
Okay, tell me about the government shutdown. We're now getting into the 24th day. Can you give me a number on how much it will take down GDP? How much will it take out of our economy?
Yeah, well, at the most, this is the way I would look at it. There's about 800,000 people in the government who are not getting paid today. Compare that to 150 million people who are working. So it's about a 0.5% decline in earnings. But there's two things to offset that. Number one, the people that are working are seeing pay raises. That's going to offset part of that. Number two, because the government doesn't have to borrow as much to pay those workers, that money stays in the private sector as well. So I would call this a hit of maybe 0.2%, which in a 3% environment of growth, it's really not going to be felt. I do not believe this government shutdown is going to lead to any major slowdown in economic activity.
Okay, Brian, a strong economy, probably a strong market. We'll leave it at that. That's a good way to start a Monday morning. Wesbury, you're all right.
There you go.
Thank you, Brian.